Chris makes a really interesting point in this video that I made about accountants not taking responsibility for helping their clients achieve better financial outcomes and hitting them with surprise tax bills, doing retrospective, reactive, transactional style work. And I wanted to unpack this comment so we can talk about it. So Chris said, most of the small business owners are the ones that are doing good things and getting stuff to happen, not book smart. That's why we engage a professional to take care of the stuff we are not good at. It's like me going to the mechanic and him telling me to do it myself and submit it so he can give me the nod of approval with his invoice. So this is a really interesting point, right? And I guess this is a great opportunity to talk about the potential analogy between a proactive and a reactive accountant. It's exactly the same with a mechanic. So let's put you in a position whereby you go to a mechanic that you aim to go get a basic service and have a check over and make sure that everything's okay. They quote you, say $300 to do the service. You come back in the afternoon to pick up your car and they go, hey, just to let you know, the bill's going to be $5,000. And you go, what the hell? What for? Oh, well, we've just decided to change the brakes, fix up the medulla oblongata, and change the spark plugs and this and that. And thanks for coming. Here's the invoice. See you next time. And you're like, what the fuck? Like, why didn't you give me the courtesy to call me and talk me through my options and educate me? Now that you've hit me with this surprise and you haven't given me the choice, I'm immediately going to be on the defensive because are you just having a lend of me? Or do you think I was born yesterday? Or is this actually required to be done? And this is the same thing with many accountants, right? Is that business owners engage an accountant and they typically will pay them a fee between kind of $3,000 and $5,000 a year to do their financial statements and tax returns, potentially a bit extra if they're doing their business activity statements. And then essentially they meet with them at the deadline. They take in their shoebox and provide them with all of the information. The accountant puts together the documents and basically says, sign here and we'll submit the tax returns. Here's your tax liability. See you next year. And in many cases, that ends up with a surprise tax bill. And it's usually because that many business owners have an accruals-based accounting process whereby if they send out an invoice, they've accrued for the income, they will pay tax on it in the year that the invoice was accrued, even though that money's sitting on the balance sheet in accounts receivable and hasn't been paid. And this is where many business owners complain. They go, well, on my profit and loss, it says I've made this profit, but where's the money? And the accountant doesn't take time to explain to the business owner how the balance sheet works, of understanding their current assets, their non-current assets, their current liabilities, their non-current liabilities, how they've been drawing out of the money as director's loans, and how that has potentially been kicked forwards in terms of Division 7A loan arrangement in order to kick the tax tin down the road. All of these things have not been discussed with the client proactively in order to help them make informed and educated decisions. Now, much like with a good mechanic, and the mechanic that I work with is fantastic, and I pride myself on working with mechanics like this, that they say, hey, we're going to do this service, we're going to do a 100-point check over the vehicle, make sure that everything's good. And if we do find anything, we'll give you a call and we'll have a conversation around what options you've got available. We'll provide you with a fixed price quote, and then you can make a decision of whether or not you want to do it. If it is really urgent, then we'll give you that recommendation. If it's something that you could potentially get a little bit more wear out of it, we will give you a recommendation of when you need to have it done, but we put the decision back into your hands. The exact same thing should happen with a good proactive accountant. So what we do with our clients is we have weekly bookkeeping that is done for the vast majority of our clients. Some of our clients, it's fortnightly, depending on the number of transactions. And essentially what we're aiming to do is make sure that when we do that bookkeeping work, the vast majority of those transactions are reconciled against a really descriptive profit and loss. So no generic categories like other expenses or sundry expenses. It needs to be really descriptive. So we break down wages and salaries. We break down essentially all of the various components of the profit and loss. So when you look at the P&L, you can see really descriptively exactly where your income is coming from and where your expenses are going. Next, every month when we close off month end, we do our best to make sure that the balance sheet is up to date and we understand what's going on in that balance sheet. So we look at the bank account. We set up a series of bank accounts for our clients. Depending on the type of business, it's usually 5 or 6 bank accounts. We've got an income account, a cost of sales account, an OPEX account or operating expenses account, an owner's pay account, a tax account, and a profit account. And what that allows us to do is that regardless of whether the bookkeeping has been done, you can look at a bank account and see exactly how you are tracking from a cash flow standpoint, because your bank balance never lies. And that allows us to track month on month of how are those bank balances changing. And that also allows us to, as part of our proactive tax plan we've got for the year, look at the money that's in the tax bucket and make sure that you've always got at least enough. For most of our clients, they have excess to what they need. So then once we pay the tax bill, we can sweep the rest over into the profit bucket. We then look through things like accounts receivable. What are your accounts receivable days? How long does it take you to get paid on your invoices? Then on the flip side, let's look at your current liabilities, your accounts payable, your accrued GST and PAYG and super liabilities. Once again, we want to make sure that that money is in the tax bucket so we can pay all of those things. And then we want to understand what's happening in terms of the value of your business, the goodwill. We want to understand your non-current assets and have a look at what equity you've got in your business. So then that allows us to go through our monthly management reporting. Then that cascades into our quarterly BAS and on-track management, and that cascades into our annual tax planning and strategic review before the end of financial year to make sure that we're doing what we can to optimize your tax position and then help you achieve your goals in the next year. So we have these conversations with our clients, we educate them around these things, we give them a menu of options along with the associated pros and cons, and of course, we give them what our preferred option is, and we give them choice. They are actively involved in the relationship. So it doesn't matter whether it's a mechanic, whether it's an accountant, whether it's a financial advisor, whether it's a business coach. I believe this is the best way to work with clients in this current day and age. It's not good enough just to abdicate responsibility. Now, there's two things in your business that nobody is going to take as much pride and love as much as you do, and that's your money and your marketing, okay? And if you are abdicating responsibility around these two things, you are destined to leave money on the table. Appreciate the comment, Chris, and hopefully this gives you some valuable insights.